Homes retracting 30%. Well, I don't know about that. I don't know if it's going to retract that much. But in this year, 2022, the third quarter, we're going to see retraction happening across the country, especially here in Las Vegas. And the numbers are coming in that we're not going to see those 20% increase year-over-year gains on home equity. And we couldn't sustain that anyways. So we're looking at now, by the third quarter, 10% equity gains year over year. And also heading into 2023, we're only going to see maybe 2 to 3% gains on home appreciation and home values. So I want to talk about in this video what's going to happen with the housing market with rising rates, the Fed raising the Fed's fund rate, and also home appreciation and values, where they're going to go heading into 2022 at the end and also into 2023. So rising housing prices and also just buyers being battered because there's so many homes that have increased. You look at the average buyer out there with this home appreciation and where we were headed, there's nobody that would be able to buy a house in this market. And so it's good to see that this market's starting to retract. Rates are going up. The Fed just raised the Fed's fund rate 75 basis points. Now, that's going to not impact mortgage rates directly, but it will in the long term impact people and the psychological effect it has on people buying into a home. This is going to affect the short-term bond, and a lot of people are going to see, Americans are going to see these costs going up. So in this video, I want to talk about a very interesting article about what is happening in this housing market. Are we going to see a retraction of 30% on these homes? And what do I see heading into the third quarter of 2022? And also, is it a good time to buy right now? This is a personal decision for a lot of people, and a lot of people out there that are looking to buy homes, and they're consumers looking to see if this is really a good time. I want to talk about in this video, should you actually get into a house and can you afford it, and what the difference in payment is, saying, a difference of 3% on a rate versus now where we're at 6%. So I want to get into this. Let's talk about it right now. All right, YouTubers, everyone out there, let's get right into the video. Let's talk about what's happening with the Fed, how this will impact Americans. We all know this is going to impact people here. And also, guys, if you don't know, I'm a real estate agent and lender here in Las Vegas. Check out my channel, lvhomeprofessionals.com. That's a great place to get started. I keep pushing it. I need you guys to go on there, subscribe or register, and check some things out. If you guys are looking to buy a home, it's a great place to get started. Also, I have other YouTube channels. I have a podcast I do, French Workbench Podcast. Check that out. Also, LV Crib Tours. That's another YouTube channel. So, we have all these things happening. We're trying to give you the up-to-date, really the most recent and up-to-date information on financing and real estate. I primarily do real estate here, and I just wanted to talk a little bit about what's happening with this article, this very interesting article I was reading, which is, what's going to happen when the Fed raises this 75 basis points. Well, we understand it's a tough market, and buying a home is a personal decision for a lot of people. And I think a lot of people just are going to sit on the sidelines, and there's nothing wrong with that. The personal decision is, can I afford it? I have people I'm getting into contract right now, and a lot of times they're just not happy with the payment, or they're maybe coming down a little bit on their purchase price because rates have gone up. I look at last year, in July of last year, we were at 2.75% on the interest rate. And the difference in payment, if you fast forward to today and you see where we're at today on payment, the rates are above 6%. And that's an increase of about $1,000 to $1,200 on an average median price home of $500,000. So you got to think that's a big deal, especially here, not just here in Las Vegas, but across the country. So you're seeing a lot of people waiting, thinking this is going to go through a recession. I feel like we are, but it's not going to go through a housing recession. And what I mean is people are banking on this depreciating 30%. I can't say that it's going to depreciate 30%. I can't even say that it would depreciate 5%. Why is that happening, or why do I think that? Well, in my opinion, you look at the shortage of homes. I look at activity, the psychological position people are in. And yes, getting into a mortgage today is a lot more expensive. People that didn't buy a year or two are probably kicking themselves, and maybe they just don't buy in the near future. I don't know. But the same house today that you're buying is a lot more expensive, so you're decreasing the amount of home you can buy. Maybe that pushes you out of a good location, whatever city you're in. So you're starting to see that. You know, we talk about millennials and people moving to bigger homes. That's all true, but it's also, you're seeing your purchasing power diminish when you see rates go up and prices not come down. Now, we've seen price reductions on these homes recently, but it's not an overall price reduction on the market. It's on certain sectors. You know, a lot of people maybe overlisted their house, just being unrealistic, and that's not, it's just not going to happen for them. So they're going to see a price reduction, maybe another one. So that doesn't mean we're going to depreciate 30% though. We have shortage of homes, and we're going to continue to see that in the next few years. And I keep, barking at this. Guys, I understand, buying a home is stressful. It's not the most easy thing to do, and it's not a necessity if you're renting or if you're already, in a position where you don't have to move, right? Let's say you're in a house that you really don't desire anymore, or you want to upgrade or get that new home. Well, you're going to stay put. You're equity rich. You have a lot of equity in the property. So a lot of these people that are looking to make this decision and make a transition, it's more of a personal decision based upon what they want and their needs. And today, we all know that the cost of homes are significantly higher. So moving into the third quarter, will I see this starting to, drop as far as the prices and appreciation on homes? Yes. Okay, there's no dispute on that. But I also feel that you're not going to see a decline. People are thinking they're going to decline 20 to 30%. Well, your grandparents or your parents might have seen that market, but we didn't see that market. The crash happened for a reason, and it was something out of everybody's control, right? What we're seeing here is high inflation and the Fed doing everything that they can to tame it, which they can't. So you're seeing costs go up, and until they get that in check, you'll see the rates continue to go up. So these interest rates that you're seeing, these short-term bonds, don't affect the mortgage rate. It affects the short-term bond, your student loans, car loans, credit cards, things like that. Now, on the impact of long-term bonds and the investors and geopolitical news and the employment history and all these other things that actually affect long-term bonds and the psychological position investors are in, then you're going to see a difference in what the rates do. But I think you're not going to see that first until you see that we have the interest or the inflation in check, and we see the inflation coming down, and then you'll start to see, I think, mortgage rates start to come down. So we're going to continue to see these prices. I feel that in this third quarter to fourth quarter of 2022, we're not going to increase 21%, 22% like we saw last year here in Las Vegas, across the country, 20%. We're probably going to be around 10. And if you start heading into to 2023, we'll probably be right at that, 2 to 3% increase in home appreciation value. So it's going to start to stabilize and come down a little bit. We all know that the market is really starting to cool down, right? Everybody knows this. We're starting to see it. And it's really how fast this happened. But the Fed has to force this. They have to force their hand on. We're not seeing the numbers. You have a slowing economy with stagnant inflation staying the same, and it really needs to come down where you start to see prices come down by slowing things down. So unfortunately, we're going to see these months headed where you're going to see a continuous market with the same look of what we see today, and you're going to see prices of homes still come down. Are we going to decline 30%? No. We're going to decline, probably none. I mean, I think that maybe we just balance out, and by the year of 2023, we're only increasing very minimal, but it's not going to be a decline 15 to 20%. Now, could the economy go into a recession? Yes, because the housing market's 1/3 of the economy, but the economy itself can still go into a recession, and we can still see things slow down, which we are. And when we see GDP, gross domestic product, decline over 2 quarters, technically you're in a recession. So if you guys have any questions, I just want to let you guys know I'm here to answer any questions. We know buying a home is personal decisions for everybody. And if you guys have any questions about should I buy now or should I not, we can run the numbers. We can evaluate your position. Like I said, I put people in contract all the time. A lot of times, they get scared feet and they pull out. because the price and the payment's too high. I understand, but we can make these adjustments together. If you guys have any questions on what's happening in the market, what's happening with rates, you can always reach out to me. I have all my contact information below. Like I said, I'm a real estate agent here in Las Vegas. And check out my website, LV Home Professionals. I will see you guys at the next video. I'm out.